Will Binance be next? Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because the question I want to ask you is, will Binance be next? FTX filed for Chapter 11 protection, including FTX US, Alameda, and many other organizations under their umbrella. Not a good sign for anyone that's invested or used their services or has crypto sitting on there. Essentially what happened is Alameda was using client funds from FTX that were borrowed, and their own token was used as collateral. So when people rushed to withdraw their money, suddenly they stopped withdrawals. So sadly, some people may not see any money from all of this. This is just a complete mess, and it's, well, not really decentralized, is it? Because one organization is feeding into another, and it's just contagious. Now the question is, what about Binance, the number one exchange that was going to swoop into the rescue, but then didn't? That maybe set the whole thing in motion. Well, here's an interesting article from Bloomberg that we need to have a look at, guys. Binance reserves show almost half of their holdings are its own token. Now, does that sound familiar? Because I think we heard a similar thing with FTX too. They were using FTT as collateral, their own token they make out of thin air. So let's have a look at this. Binance's holdings, major crypto token holdings, include 74.7 billion worth of coins, of which around 40% are in its branded stablecoin and native coin, according to data compiled by Nansen based on information from the world's largest digital asset exchange. Of the 74.6 billion termed as net worth, about 23 billion were in BUSD stablecoin issued by Paxos, and 6.4 billion in its Binance coin, according to Nansen. The exchange also has 10.5% of its major token holdings in Bitcoin and 9.8% in Ether, Nansen data shows. In a November 10 blog posting, Binance said its disclosure of holdings was a snapshot of major token holdings and starting point, and that more data would be shared later in a fully audited report. If anything, all of this makes me appreciate the rigmarole that we have in the finance sector, the traditional finance sector. I know it's adding additional cost, burden, and limiting opportunities for people, but what would you rather? Certainty or the Wild West? Because this is what you've got here. So you've got to ask yourself, what environment would you rather have? And what do you think the majority of, at least people here in Australians, would have? This is just sapping confidence out of the crypto sector. So while Binance shared details of its reserves, the dashboard does not break down how much of the assets are its own holdings versus those of its customers. These are user assets in the form users choose to store with us, Binance CEO Changpeng Zhao said in a tweet Friday. We don't convert for them. The world's largest exchange released the information after Zhao announced earlier this week that Binance would provide proof of reserves to be more transparent. The demise of Samson Bankman-Fried, FTX's.com, has raised concerns over the opacity of exchange balance sheets and is prompting companies to increase disclosures. Crypto.com has also publicly shared its reserve pools on Friday. Now here's the thing, guys. I know the whole saying is not your keys, not your wallet. You put it on an exchange, there's a risk to it. I understand that. I completely agree. But the problem is, this is going to inhibit normies using crypto. It's going to inhibit mainstream adoption. It's going to scare off institutional investors. Because people don't want to hold everything on their own computer. They don't want to hold their own keys. They want to have a third party that can manage it on their behalf. You don't... I'm hoping most of you don't have piles of cash and everything under the bed. There's a reason why you want it in the bank. There's a level of convenience there. The risk is that you'll get central bank digital currencies and the Reserve Bank and authorities can abuse that, but we need to lobby to ensure that doesn't happen. Binance is the first unlisted crypto exchange to come out with the details since FTX collapsed, the latest in a series of crypto businesses to go bust this year. Crypto exchanges include OKX, KuCoin, Polynex, and Hubu this week vowed to increase transparency and provide greater clarity on their holdings. The swift collapse of FTX.com and the rest of SBF's empire was partly triggered by revelations of potential overexposure to the exchange's native token, FTT. As FTT prices crashed, so did FTX.com, pushing it to the brink of bankruptcy. So, the net worth number on these sites indicates the value of the token holdings in the addresses we've added based on the documents from Binance. A spokesperson at Nansen said, adding that those are addresses for the chains, the blockchain analytics. What? Anyway. So several firms are contacting them about this. So guys, will Binance be next? Let's have a bit of a talk about this. Now, people were using FTX thinking it was a legitimate, safe brand. You had institutional investors, pension funds using that platform, investing in that platform, having exposure to that. People I guarantee you, people were investing it and then diversifying by having a range of different cryptos. And now, Chapter 11 protections. They may not see a penny. If you can get your tokens out, get them out. This is just the inherent risk in this sector, everyone. How many times has it been said, be prepared to lose everything you have in crypto? I've fallen out of love with the sector. I've just seen too many scams, too much, pointless projects. People praising these altcoins or these projects that they say will solve all these problems. That isn't a problem. You know, it's like an online merchant system that can do all these things. Yeah, but we already have established players in that sector that don't even need to play around with a little fluff coin. It seems that the one utility of cryptos are being used to raise money for projects outside of the traditional financial sector, not having to jump through all of the rigmarole, not all the legislation, not all the pain points that exist. Rather than raising money on the stock market, which is a costly and lengthy process, put a token out, do an ICO, initial coin offering, create a token that's not a security, but you're pretty much using it just to raise funds. You've got the play to earn. You pay to have the possibility to earn. It reminds me of a lot of the bloody barter card and their point system. You know, why the hell would you want to use something that has less liquidity than real money? So, I don't know. You tell me, guys. I mean, think about it. What business? What business? I mean, Tether right now. Tether is a huge risk. When Tether collapses, which will happen eventually, because look at the people involved. What business would want to have any exposure to the crypto sector just with that risk there? Think about it. Like when you're storing data on the cloud, you want to go with reputable brands, well-established businesses that are going to outlast you, not fly-by-night places in the Bahamas. Anyway, sorry to all the people that have lost their money. It's the risk in the sector. As always, guys, thanks for watching. Check out my other channels, HeiseBim and HeiseSays International. Let me know your thoughts and opinions on this one. We've been covering it in the other international channels, some of the topics there. If you're a fan and want to support us, you can financially on YouTube or Patreon, using our referral links, buying our pocket squares, or calling us if you need an architect. Take care, everyone. Have a great day, and I'll see you in the next episode of HeiseSays. Bye for now.